Well, to start out this week, the grain market is pushing higher for corn, wheat, and soybeans, and that was on the overnight trade as well. And that was because of concerns about the weather, not only in South America, but also right here in the United States as well. And we did have some overnight sales, albeit it was just one load of corn, and it was 115,000 ton of corn that went to Egypt for a destination, and that was about it. So let's take a look now and see what is going on with the corn market here so far this morning. And we were up about 1.5 pennies to 2 cents for a good portion of the day trade so far. March corn right now up 2 1/4 at 358 3/4. New crop December corn is up 1 3/4 at 391 1/4. March soybeans up 6 1/4, 991 3/4. September soybeans up 5 3/4. It's trading at 10.10. March Chicago wheat up 6 1/4 at 447 1/4. And new crop July Chicago wheat up 6, 472 1/2. March Kansas City wheat up 9 cents at 452. July wheat up 8 1/2 at 483. And March Minneapolis wheat down 1/2 at 614. New crop July wheat though is up 1/4 at 631. And for the cotton market right now, March cotton down 209 at 78.39. New crop December cotton down 90 at 74.61. Let's welcome in Scott Gecas. He is at the edge of the trading floor in Chicago there at the CME Group for analysis. And Scott, first of all, these prices pushing just a little bit higher here today. Seems like the trade is very focused and a little bit concerned about that South American weather.
Yeah, the weather across the board doesn't matter what you're looking at, soybeans, corn, or wheat. You know, it is pushing prices a little bit higher. You know, always going to be the main focus in recent, coming out of Davos is the weak U.S. dollar. It's down 5% just on this year alone. That's pretty significant. Plus all the everything else coming out with the president talking about a stronger U.S. dollar, stuff like that. That's always going to be a concern. But the main focus going forward in the commodities right now is going to be the main focus on the weather. One stat I did want to point out that came across I thought was interesting is in the corn market. With the winter corn, wheat being planted in Brazil, it's 40% below the average. That's pretty significant. If this dry weather continues in Brazil, we could see, a decline as much as far as, since 1998. That's pretty significant.
That is a significant number. What are you are hearing that that's attributed to? Is it just the dry weather, or is it a combination of dry weather and price?
Well, dry weather mostly, but yeah, the price is always going to be affected because of the weather. So.
And even one more time, for those folks who may have missed it, you said plantings were down 40%, intentions?
Yeah, 40%. They were down 40%. If this dry weather continues, you're looking at declines back to 1988.
My goodness. All right. Well, that would certainly spell something different then for the United States corn market, should that come to fruition.
Well, that would be. You would think that would push prices higher. So, 360 is major resistance. If we break that, we got room to run.
All right. Scott Gecas is here with us. And Scott, stick around. We're going to get into the livestock trade when we come back after this break here on the Market Day Report. Let's get everybody up to date on the latest numbers in the cattle market and the hog complex as well. We'll start with the live cattle here. And this is after the cattle on feed report that was out Friday afternoon. February now up 140 at 126. April live cattle are trading at 125.28. And that's about in the middle of the range for that contract. It's up 66 cents, but between the low of 124.80 and the high of 126.12. June live cattle trading at 116.38. Again, here right at about a middle of the range, 115.85 for the low side, 117.18 for the high side, and that is up 20. What about the feeder cattle market? Well, nearby March is up 48 at 147.20. April feeder cattle, 147.62. That's up 40. May feeder cattle up 23 at 147.28. For the hog complex here at midday, the nearby hog contract for that front month of February is up 37 at 72.65. April hogs up 20 at $74 even. May hogs down 27 at 78.60. Let's bring back in Scott Gecas. He is there at the edge of the trading floor in Chicago at the CME Group. We'll start here with the cattle market first. Again here, according to some analysts, a rather negative report, but the market seems to have shrugged that off, Scott. And, we traded higher cash, or at least strong cash, in many areas, and looking at higher again this week.
Yeah, and it's really weird how that cattle market's playing out. Like Thursday, like I said, on Friday when I was on, you seen that big sharp sell-off. It was rumors that it was a big fund liquidating, ahead of that number. That number was bearish, but the market is resilient and it's pushing a little bit higher. So, the rumor was maybe somebody knew something they weren't supposed to, reacted on it. But either way, the market hasn't reacted negatively to that bearish number. So, the December placements are still above average, about 100% versus last year. So that's definitely supporting prices as well.
What about the longs and the shorts in this cattle market? Where's the dividing line right now?
For what we're looking at as far as on a technical level, the 126 is the line of resistance. Above that, we were looking to be long. Below it, you look to be a little bit short.
All right. We've already got asking prices already starting out a little bit stronger this week for some of this cash cattle trading.
Yeah. Walking in this morning, cattle wasn't trading above 126. As you've seen earlier, we did test it a little bit, came a little bit off. Now we're just looking for that positive close above 126. And
we are just about 8 cents away from that, not too far. And right now, 132 higher. Well, the feeder cattle market obviously is watching this corn market as well.
Oh, yeah, of course. The feeder market is going to be focusing on the cord because that's what they're going to feed their feeder cattle.
All right, on over to the hog complex then. We were talking about this hog market being a little bit mixed today, with the front months having a little bit more strength than some of the deferred contracts. Looks like that 73 mark might be the place to aim for in the February contract.
Yeah, with the hog market just in general, when we had that big sharp sell-off in cattle on Thursday, hogs followed it. They pop right back up with it. Right now with the hog market, you're in a very tight range between 74 and 72.
Crude oil market's a little bit weaker today also, Scott. The dollar pushing a little bit higher. Are the two related?
Yeah, they're definitely related. With the oil market, the dollar market, even with the bonds, all that is, moving around based on U.S. policy, the weaker dollar. With the oil market, you have concerns about the output in Venezuela. So, we're going to be bullish in oil. I mean, in the beginning of the year, everyone was calling for $80 a barrel for oil. So until that trend changes, you're still going to be bullish here in oil as well.
All right, sounds good. Scott Gecas here with us with Longleaf Trading. Scott, always good to talk to you. Thank you very much. And let's bring everybody the latest numbers on these quotes for the crude oil here as we get closer to the 12 o'clock hour Central Time. March crude oil down 60, 65.54. And over to the dollar right now, and then as Scott mentioned, this dollar headed just a little bit higher, but still holding at a range, 89.310 on the nearby March contract. That is up 420 points.
All right, thanks again for the rundown, John. Always appreciate it.